Hello, everyone. Welcome to the Nasdaq Dorsey Wright podcast for Monday, July 19th. My name is Ian Saunders, and joining us here as well today is Sara Maley. And coming in here to heading down towards the end of July and coming into a certainly a significant movement day for many of the major indices we have been continuously tracking here on the Nasdaq Dorsey Wright platform. We had a day last week that saw the S&P 500 hit a new all-time high earlier in the week, and then started to pull back and trading over the subsequent trading days towards the end of last week. And we see some of that pullback sustain with movement here this Monday, with the broader S&P 500 index down a little bit over a 1.5% right now. It got down to post a intraday return of about -2% this morning. Seen a little bit of back and forth movement there, but certainly a risk off day for most of the major domestic equity indices. So for today, we wanted to come in and take a look at some of the different support levels and different levels from many of the major indices that we track, and then take a look at some of the technical pictures for many of the larger securities that are tracking some of these indices. So when looking at the S&P 500, we saw movement last week, caused the chart to the default chart there for the S&P to reverse down into a column of bows from its all-time chart high that was reached last Tuesday up at 43.90. The reversal down into O's took it down to 43.30 with movement last week. And then we come in here on this Monday and see a further push to the downside down to an intraday low of 42.40, at least at the time of this recording. That did lead to a sell signal on the default chart there at 42.80. And we see that further support from here will come down at the 41.70 threshold. Some interesting things to note is that we've seen the S&P 500 have some retractions over the course of the past 8 or 9 months or so, but haven't seen all that many major significant moves, at least when looking at significant moves from a historical perspective. The S&P 500 has actually not seen a decline of 5% or more since October 28th of last year. So we've seen multiple consecutive months here of some pullbacks, certainly from when we were hitting all-time highs, but getting a little bit overbought, pulling back from those levels. But then by and large, continuing to uptick and move higher there, at least over the past several months. In looking at it from a historical perspective, that puts us at now 264 trading days since we've seen a 5% pullback there for the S&P 500. And since 2010, we average about 111 trading days in terms of the average number of trading days from between 5% pullback. So whether or not we're overdue for that move now, certainly at least wouldn't be a surprise to see a little bit more movement, or at least movement to the downside from a volatility perspective over the course of the next few weeks here. But in taking a look at the default pictures for some of the broader funds, first looking at the Spider S&P 500 ETF Trust, ticker SPY, we've seen that this movement, and we're about 3.5% down for the broader index from its all-time high, at least at the time of this recording, has not led to even a column reversal on the default chart there for SPY. Still sitting at a suitable fund score there, 3.42, and sitting on multiple consecutive buy signals, actually giving consecutive buy signals on that SPY chart all the way back since March of last year. So that consistent movement to the upside is something we can certainly see. Are up on a little bit of the stem, current levels at 435. We would get a pullback into a column of those in the particular chart with movement to 420. So haven't quite gotten there yet with at least at the time of this recording on Monday, sitting at around 424. But certainly would at least be a point to look out for. That 420 threshold also right now is smack dab in the middle of the 10-week trailing trading band for that particular fund. And then we also see some similar movement from the Invesco QQQ Trust, ticker QQQ, which takes a look at Nasdaq 100, right? We did see that fund move to a sell signal back in March, and it's stormed back higher since to give 2 consecutive buy signals and also reach new all-time highs up at that 365 point. We're sitting at a current chart level of 353. So if that fund did continue to drop down to 350, we would get a pullback into a column of those. But again, still sitting at that all-time chart high, haven't gotten that pullback there quite yet, and will certainly be an area to at least keep an eye on when looking at further movement over the next few days and few weeks here, Sarah. But while we haven't seen as much movement from a charting perspective for many of these major funds, we have seen some movement on some of the individual point figure charts for some of the largest names within these funds.
Yeah, so Ian, on Friday, we wrote in our daily equity report a little feature on some of the FAANG stocks and just some of the moves that we've seen over the past 60 days, 30 days. We've seen some significant outperformance. We've talked about, large cap and small cap, maybe that shifting strength there. But focusing in on those FAANG names, once again today, we did write about them on Friday, but today's action has caused some chart action to occur. Notably, first, Facebook. So, the FAANG index, or the FAANG acronym, is going to be Facebook, Apple, Amazon, Netflix, and Google. So there's 5. Technically, you could go 6 with the 2 shares of Google. But looking at the first letter, so F for Facebook, we see that today, after forming a double top at 356, the chart moved to a sell signal today for the first time since January. So while a sell signal is most definitely not a positive here, we can look and see that this could be a potential shakeout pattern, which is technically a bullish pattern. So from here, we would need to see the chart reverse back up into X's, and then the chart would complete with a triple top breakout at 360. If the chart were to continue lower, significantly lower, then that would negate the shakeout pattern. But despite being on a sell signal today, I think that this is one that still has those attributes in its favor, still is trading in a strong uptrend, and has pulled back from it's trading right near the middle of its trading band now, with 3 attributes in its favor. And with Facebook, I think it's notable. It's maintained that market relative strength buy signal since November of 2012. So we did see that chart reverse into O's back in November, but that signal still remains intact. So a long-term market leader. And earnings for Facebook are expected on the 28th. So just keep that in mind. Moving on to the next letter, so Apple, obviously symbol AAPL. Apple is a 3 for 5er in the computer sector. We saw Apple hit an all-time high at 150 just last week. Before today's session, the chart was 110% overbought, so in that extreme, technically overbought area, and today we did see the chart pull back. So it's pulled back now to 142, remains on that buy signal well above support at 124, has given 2 consecutive buy signals actually. So this looks like a good potential buy on pullback opportunity if you were looking to get into Apple, perhaps from this pullback from all-time high. So still remains, I think, based on the intraday weekly overbought, it looks like we've cooled off now to about, bear with me one second, about 78%. So still technically, still in that overbought area, but not as extreme as that 110% reading. So again, potential buy and pullback opportunity. Another long-term market leader has with maintaining that market buy signal since March of 2004. And so again, earnings similar with Facebook. Apple expects earnings on the 28th. And then the other A in our acronym, Amazon, so symbol AMZN. Amazon's one that we saw that was pretty range bound for quite some time. It broke out of that range back, in the first week of July with the announcements of just the contracts and things with Microsoft and with Jeff Bezos, stepping down from his CEO role. We saw the chart move to an all-time high at 3,712. That chart completed a bullish catapult there on July 6th at 3,584. And then with today's action, we have seen the chart exhale. So before today, it was 49% overbought. So not too extreme, but has pulled back closer now to the middle of that 10-week trading band. So again, maintaining those consecutive buy signals well above support at 3,136. We did see monthly momentum just flip positive here, so that's another positive for Amazon, and another, again, long-term market leader, which I think is a theme with most of these, with the exception of Netflix, as you'll see. But Amazon has maintained that market RS buy signal now since April of 2007. So again, another market leader, 3 attributes in its favor, good buy on pullback opportunity, and expects earnings along with Facebook and Apple on July 28th. So that will be a big day to watch. And then there's 2 more in our acronym. I think I'm going to throw it over to Ian, and he'll go ahead and close it out with Netflix and Google.
Perfect. Yeah, thanks, Sarah. Like you mentioned, they're looking at Netflix first. Like you mentioned, both of these names look, or all of these names rather, mostly look pretty strong from a technical perspective with favorable technical attribute scores, generally positive trends with The exception, though, being Netflix. Netflix has seen some more recent selling pressure than some of these other names. It actually has been a weak attribute name, so that's indicated by our technical attribute score that goes from 0 to 5 by having a technical attribute score below 3, so 0, 1, or 2. It's been that way throughout pretty much all of 2021. Up until this point, we saw it uptick to a 3 for fiver from an attribute perspective in mid-December of last year, and it downticked back to a 1 for fiver from an attribute perspective in mid-January. Currently, it doesn't possess any of its technical attributes that is 0 for fiver, and we've seen it move kind of really largely sideways in a rather large trading range throughout much of the past several months, or really much of the past 12 months. It attempted to tick a bit higher over the course of the past several weeks, going up and testing its negative trend line, or its bearish resistance line there. Got up to 552 with movement last week, and then movement on Friday led the stock to reverse back down into a column of those, failing that resistance line test to a current chart level of 528, where it has remained at least through at the time of this reporting on Monday. One of the names that isn't showing quite as much downside movement with the pullback we're seeing across many areas in domestic equities this Monday. However, it is also going to be releasing earnings tomorrow on July 20th, so definitely going to be a notable point to look towards for those with exposure, considering exposure there towards Netflix. But it would be a 0 for fiver from our attribute perspective. It's on a sell signal it gave back in May. We'd see further support from here, come down at 480, a little bit further of a drop from its current level there around 528. If the stock did see some further push to the upside, that we do see near-term overhead resistance potentially seen there at 552, and if it broke past that point to get to a chart level of 560, that would return the stock to a buy signal and also return it to a positive trend. So definitely gonna be an interesting point to watch to see how this the earnings call tomorrow might potentially affect the price movement as we move through the next few weeks here. But for now, going to be the weaker of the FAANG names that we're taking a look at here this afternoon, and would really be kind of a name to wait for potential movement to the upside before jumping in and adding more exposure at these levels. And taking a look at the last name that we'll cover this afternoon, looking at Alphabet, ticker GOOGL. Alphabet has, like some of the other names, seen some consistent pushes higher over the course of the past several weeks. It reached a new all-time high with movement last Tuesday, like the broader S&P 500, up at a chart level of 2560, where it actually continues to remain even with movement on Monday. Google has seen a slight decline, it's down about 2%, so not quite enough to lead it to reverse down into a column of those. It's sitting at around 2483 at the time of this reporting, and we would need to get down to 2464 in order for it to reverse down into a column of those from its all-time chart high. Again, like many of these other names, did see that pullback, it would lead it right down towards the middle of its trading band, which currently sits at a chart level of 2400. But Google's a favorable from an attribute perspective, 4 for fiver, been in a positive trend since October of last year, up on a little bit of a significant SEM, so wouldn't be all that surprised to see a little bit of a pullback, but by and large favorable name, and certainly could be an area to potentially look towards as a buy on pullback opportunity, like some of these others that Sarah had mentioned there earlier. So with that, Sarah, most of these names look pretty favorable from a technical perspective, with the obvious exception there of Netflix. But there's some other ways that we can track these names from a broader index perspective on the site, in addition to the broader index funds that we touched on there earlier.
Yeah, and you bring me right to a point that I think I skipped over, is the fact that these 5 or 6 names, if you will, make up 33% of the Nasdaq 100 ETF QQQ, and then make up, or the index, if you're rather, and then also make up 17% of the S&P 500, or around those levels. So, you know, these names do have quite an effect on the movement of these indices. And there's one other index that we use on the site if you were looking to get a feel for how these names have moved as of late, or if you're looking to just do some broad performance. The symbol NYFANG, so New York FAANG, that's the New York Stock Exchange, or NYSE FAANG Plus Index. So the FAANG names, as we discussed, are about 5 names. Again, Google gets tricky with the 2 share classes, but the so those 6 would be the classic or traditional FAANG names, but the New York Stock Exchange FAANG Plus Index tracks 10 names. So that adds in names like Twitter and Tesla, NVIDIA, some of those other kind of growthy, big techie kind of companies, if you will. So again, New York symbol NYFANG. If you look at the chart, the default chart is I believe a 4-point box, so you'll definitely need to adjust that to kind of get a more clear picture. But I created a smart chart on the chart using a 50-point scale. And what I found interesting is just the fact that this chart has rallied up to the 7350 level 3 times now. So it's created that spread triple top formation. It created it once in February, and then has now tested that level twice here in the month of July. So we have seen also little periods of consolidation on that chart. I think it's interesting to see just how range bound it's been, and then within that range boundness, almost little clusters of even more consolidation. So we'll continue to watch that to see if that chart's able to break out. I think it's a pretty telling picture here. But yeah, I think that these names are, as Ian said, high attributes. Threes are higher, with the exception of Netflix. And action like today, I think offers, even though it is not necessarily the most best feeling to come in and see all the red, I think that we do have to look at this objectively and see that these pullbacks like today do offer nice buy on pullback opportunities. So with that, if you have any questions on any of these names or any content in the report, again, if you want to read more on these names, we did cover them on Friday. Again, the charts were updated through Friday, so today is actually going to be a better bet in terms of up-to-date pictures. But if you were interested, that piece was dated from Friday the 16th. But with that, I think Ian and I, we thank you for joining us today, and we will look forward to talking to you next week.